Good morning, traders. Welcome back to another episode of your favorite show in the morning, Market in the Morning. I'm your host, Kevin Dubrisky, and I've got a great show in store for us. We're going to cover some S&P 500, the NASDAQ, the gold. We're also going to cover fundamentally what's moving markets. We'll cover some technicals too. I'll give you guys some great trade setups to look out for today, and we do have a big announcement. So run that like button up, and I'll get the announcement going very shortly. But first, let's pull up the chart and see what markets are telling us today. Good morning, guys. Good morning, Jack. What's going on, everybody? So the first thing I want to mention, guys, is market just released, MRKT just released a sick update. So as you guys know, the home screen usually has our higher time frame and intraday bias, and it has a chart on our screen too. Well, now there's an update to say, hey, listen, higher time frame on gold right now, clearly, we're looking at a higher time frame daily, is bullish. We were just coming off of all-time highs. However, if we're looking at our intraday and our more recent price action, we can click it and check it out. Now it gives us more intraday price levels along with our intraday bias, which is slightly bearish. So now I have a bearish target on gold, 39.62. I'm able to come down here. And what's cool too, guys, is the what's impacting is updated as well. So if I'm on higher time frame, it's going to give me what's impacting gold on the higher time frame. So let's break it down. We'll cover some of the economics and some of the fundamentals, and we'll see what's moving gold and which direction we should be trading it today. Something I did want to mention before we really break into it, guys, is we've been getting a lot of easing on the rate cuts, right? So last week, Powell spoke FOMC, and the odds of a rate cut dropped from 95% to 64% in a matter of a day because Powell wasn't as confident in rate cuts going forward as he was for the September and October. So with that being said, December is more up in the air. Optimism is getting crushed in the market. Hence, we're getting this pullback. Now, a lot of times with uncertainty, gold performs well, but a lot of things are easing up right now. Yep, that's right, man. A market is the best. So what's impacting gold on a higher time frame? Gold futures are consolidating near 4,000 with medium-term prospects supported by expectations of a Fed policy easing in early 2026, ongoing central bank buying, and elevated geopolitical risks. While high U.S. interest rates and a strong U.S. dollar present short-term headwinds, so guys, here's our short-term bias, right? We know higher time frame wise, gold has still been bullish. It went as high as 55% off of this New Year's open. So with that being said, a pullback of 5%, 10%, about 6, 7%, whatever the case may be, isn't something that we should be completely going bearish on gold with. Short term, yes, because a lot of us are day traders. It's important to know short term, day trading wise, intraday, the direction. But it's also more important to know higher time frame wise, the direction too. Because if our lower time frame is suggesting bearish, which it is, well, once it starts to push back bullish and it lines up with our higher time frame, that's when we get much better results and impacts. So here's a few things impacting gold to the buy side overall on the higher time frame, and then we'll look at the lower time frame and we'll sort of see that comparison. So key factors are going to be Fed policy outlook. Expectations for Fed rate cuts in early 2026 are building, which would reduce dollar strength and support gold prices over the coming months. So again, this is more of a longer term view, not an intraday, right? As day traders, we don't really care what's going to happen in a few months. We care what's going on right now. Central bank demand. Central banks have been buying gold like crazy this year, and they are not stopping, especially in developing economies, continue to accumulate gold reserves, providing steady underlying demand and offsetting some pressure from a strong dollar. We will cover the dollar. As you guys see over here, this is gold on trading view, and as we see the past few days, been very range bound. So at the moment, we're sort of making our way to the bottom of the range. We'll find some key levels and some analysis. Geopolitical risk is another thing that's sort of keeping gold bullish overall on a higher time frame. Persistent geopolitical risks in the Middle East, Asia, and Europe increase safe haven flows into gold, supporting prices over weeks to months. Now, let's check out, guys, that intraday time frame and check out how things go bearish now. So we saw higher time frame, clearly bullish, higher lows, higher highs. Now, at this point, intraday, it looks like we're creating some higher high, then a lower high, And we tried to create some lower lows, but we're trying to hold them too. So we're very range bound on gold right now. Ideally, would like to see if we can move back towards this demand zone, this area of support 39.90. Now, if I look at market right here, 39.62 is a target to the downside. Well, guess what, guys? My next area of support on gold is at 39.6150. That's zero point 0.5 ticks away from that market level. So what I'm going to be looking for today on gold is, first off, I want to make sure the dollar is still bullish because that will help support a bearish gold. And I want to see if we're able to try to break our way through this demand zone. So we already rallied out of it once right here, but then we failed, came back into it, rallied again, and it looks like we're failing yet again. So that tells me that this area of interest, this zone of support, is starting to lose its strength, right? So I'm looking to see if we can get that bearish target on gold to hit. Yeah, right. And views, man. Early Merry Christmas for sure with this market update. It is so cool. So here's some things that we could look for that might impact gold. RBA surprises with rate hike strengthening AUD, pressuring gold. ECB signals hawkish stance, strengthening euro and reducing gold appeal. So there's a few things going on around the globe, not just the US, that could impact gold markets. Now, same thing, guys. Now that we're on intraday, I want to come down to what's impacting gold on the intraday and look at how things changed. So you see how it's bearish, 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 neutral. Before, when we were on a higher time frame, it was bullish, 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 bearish, right? So now that we're on our intraday, we see a lot more of a signal signaling to the downside. Fed rate cut odds. This is what I mentioned before, guys. Fed officials signaled doubts about further rate cuts, with December cuts dropping. What's up, Capital? Good morning, good morning. With December cuts odds dropping from over 90% to 65% in the past week. Exactly what I mentioned earlier, guys. This is a huge impact. Weakening gold's appeal as the US dollar stays firm. So if the dollar is staying strong, and a lot of people will look at the dollar and look at gold and try to get them to sort of go inverse from each other, right? They have to be inverse or else I'm not taking it. In my opinion, the dollar doesn't have to run a complete inverse to gold, but if we could see strength in the dollar, we look for weakness in gold overall. So I'll pull up the dollar right now on the chart, and something I see right away, this is an hourly time frame, is look at how strong the dollar looks right here. Since late October, October 28th over here, the dollar has been able to move up 1.5%. This is a strong dollar. This is helping us have that bearish bias on gold. I give you a big chance. Let's get it, man. Let's get it. What's also cool, guys, with market is it gives you upcoming catalysts that could impact whatever equity or commodity you're looking at. Now, because the government's shut down, we're not getting a lot of the news catalysts that we would get for the US economy. But if we come over to our calendar, and again, this is where market sort of holds value over all of these other companies, you don't need anything else other than market to understand direction, fundamentals, and what bias you should have intraday and on a swing trade basis. So I pulled this up. We're coming down to calendar. We're going to go to economic. Now, because I'm in the US based, I want to keep an eye on impact, high impact only. In countries, I do want to keep an eye on just the US. You guys can save any filters you want. And whenever you save it, it'll automatically save over. So every time you want to check it, you don't have to change the settings. Very clean. You hit save filters and it's saved. So Monday we had ISM manufacturing PMI. What's going on, Luca? I'm Kevin on Discord. Yes, sir. Guys, join our Discord community. It's Mrkt AI, and of course, follow us on social media, Mrkt_AI on Instagram and X. Now, on Wednesday, we do have ADP employment change. Now, because we don't have some of the other employment reports because the government's shut down, we're really set on looking at employment through the private sector, which is ADP employment. So we could click this. Market's going to give us a little bit of a sentiment. It's going to say AI prediction. Estimated actual is going to be 22,000. So market's predicting 22,000. The forecast is 24,000. And previous was negative 32,000 jobs. Massive hit to jobs report. Look at the chart. We have our historical data right here. Clearly, job markets are in a bad spot right now. What's cool too with market, guys, if you're not sure how this report actually impacts the market, you can look at analysis. you could look at impact, and you could look at report summary. Now, report summary is only active when the actual report comes out. So what Market does is it takes the report directly from the source and it runs an AI algorithm through it, and it'll say, hey, this is how it came out, this is what to expect. And instead of having to go through 8 to 10 pages of a PDF, the AI runs it for you and it'll break it down for you as well. And what's great too, guys, under impact is we can look to say, okay, forecast is 24,000. If we come in lower than expected, how can we expect the reaction on equities? How can we expect the reaction on gold? Now let's see. So that's our economic data for this week. We have earnings we could check up on too. Now, big tech had big earnings this last week. We have live news tab too. And what's great too, guys, Market just released a new update. So they had all for live news. This is big headlines that come out. As soon as they come out, Market will show them. Popular. So any of us are able to vote on whatever we find popular and important on Market AI's headline. So if I find that Fed Daily says a 50 BPS of cuts this year makes Fed better positioned, well, I think that's very important. We're going to vote that as high impact, and it'll make its way to the top of the popular list. Now, the high impact tab, this is brand new, guys. This came out just a few days ago. You're going to click the volume button over here, and it has high impact alerts. So whenever an alert comes in for a high impact, it'll make a little ding noise. So let's say you have your trading view chart up, you're charting intraday, and you have market on the other side. Instead of having to look back and forth over and over, you add your alert so you're alerted whenever a high impact news comes out, and then you could briefly and quickly look at it. Yo, Luca, we'll see, man. We'll see what kind of discount we got running. We'll get the lifetime members or annual members a great sale for market, guys. So, guys, let's take a look at the NASDAQ now. Now, NASDAQ, same situation where it's been range bound the past few days. This is last Wednesday. This is last Tuesday. So from last Tuesday to today, we're bearish. We're down about 1%, 277 points to the downside. But overall, we were in a very tight range on NASDAQ. So what I would like to see is that continuation to the downside. But I also want to see how's our bias looking on market. So tech-led sell-off intensifies as valuation and macro concerns weigh on NASDAQ 100 intraday. Yeah, Kelvin, man, this market update is sick. Guys, if you're here, make sure you hit that like and subscribe button. I had an announcement. I'm going to announce it right now. So Market in the Morning, guys, if you run the like button up, we get the show going. Definitely share it with your friends. We're going to be hopefully pushing Market in the Morning from Tuesdays to Tuesday and Thursday. Hopefully we can develop a stronger program for you guys. If you do like these shows, definitely smash that like, share it with a friend, hit share if you're viewing it on Twitter to share it out as well. What we want to do is create the best platform for you guys to use intraday with yourself through Market AI, but also a good program to watch in the mornings to get a bit of an understanding of market direction so you're not struggling in the morning and try to figure it out yourself. So NASDAQ 100 dips amid cautious Fed rate cut and mixed earnings reports. Guys, something I want to mention. Somebody asked me this morning, what are my thoughts on the current market conditions? Well, we saw that with optimism in the market going into September, markets were rallying strong. I mean, we were going all-time high after an all-time high for streaks, days in a row on the S&P 500, days in a row on NASDAQ, up until more recently, last week. Remember, Powell spoke, and the odds of a rate cut went from 94% or 95% to 64%, a huge drop. So that completely demolishes any type of optimism. Markets rally on optimism. If we're stomping out that optimism, guess what? That's what led to this drop. That's what led to this uncertainty. When we have uncertainty in stock market, the NASDAQ, the S&P 500, that's when we get big selling and a big sell off. Now, something else to note, guys, is when we had the uncertainty of tariffs back in, let's see if we could open this up. When we had the uncertainty of tariffs back in January to February, that led to this massive sell-off on the NASDAQ and S&P 500, over 24%, 30% to the downside. With that being said, as soon as we had some certainty, which that certainty was Trump putting a pause on tariffs, markets were able to rally higher. Then they were able to make trade deals. Markets were able to rally on that. And then we had Fed rate cut optimism, another fuel to the rally, right? So we had all of this fueling the market. But now at this point, Not so much. We're running out of that fuel. So the NASDAQ 100 experienced modest decline following the Fed Reserve's recent 25 basis point cut to 375 to 4%, a move supported by most FOMC members, but reflecting concerns about gradually cooling labor markets and persistent inflation. Awesome, Kelvin. Yeah, you guys let me know if you're interested in us spreading out Market in the Morning to Tuesday and Thursday, possibly getting a whole program from Monday through Friday with some other traders, other analysts, and really just covering the best stuff for you guys. Fed Chair Powell emphasizes uncertainty. So, whenever we hear uncertainty, we should immediately think of some type of strength in gold. But just because Powell says uncertainty doesn't mean all of the other factors are bearish too. And a cautious approach. Cautious approach is a big red flag for equities. We want optimism, not caution. Mixed earnings from key tech related companies like Shopify and Uber also contributed to subdued market sentiment. So Fed rate cut is a key factor, earnings misses is a key factor, and Fed policy uncertainty. Now we come down to market. Now let's pull up our intraday time frame for NQ right here. So 25,550 is a possible downside target. So let's get our market levels in there. Let's see. So I'm going to draw out my trend line. 25,550 we had. So we're going to put that right here. This is our market level. I do have a label right there, 25,550. That's our market target to the downside. 25,950 is our market level to the upside. So I'm going to mark that out. And I see that our market level to the upside is in an area of interest that I had. So guys, something to use market for as well is to help give you confluence in your own technical analysis. So fundamentals are super important. That's what's really driving the market behind the scenes. Our technicals help us find that entry and help to co-align with our fundamentals. If fundamentals are screaming bearish, but a technical is saying, hey, we might find demand here, maybe we should be a little extra cautious on taking that long position. Now let's take a look at our impacting NQ intraday, and right away we see 4 big red signals. So intraday technical breakdown, persistent intraday selling pressure has driven NASDAQ futures below key support levels. As we see overnight, we were able to break below this zone. This is going to be my new area right here. This was an area that worked as support yesterday, and it also worked as support the prior day. And then overnight, we were able to break it. So what I would like to see on the NASDAQ is if we can retest within that zone, come near our market level, and find some resistance to go short to target our next market level to the downside. Now, if we are able to break lower first and we find support first, it's going to depend on our fundamentals and if any key factors come in. Yo, I got you, man. We could look at the dollar next. We did cover the dollar a little bit earlier, sort of going over how it is more bullish than bearish at the moment. Rising bond yields, rising US Treasury yields are pressuring growth stocks. This is another big red flag, guys, for equities at NASDAQ and S&P 500. So rising Treasury yields have a big impact to the downside on equity. So if yields are up, stocks are down. This could contribute to broad-based weakness in the NASDAQ. Tech valuation concerns. A lot of people are concerned that AI and all of these other big sectors are a little inflated at this point. I believe Nvidia just hit 4 trillion market cap, 5 trillion market, something crazy that no company has hit before. So it's something that as traders and as individuals, we're lucky to be alive and be witnessing this, right? These are things that we haven't seen in the past. Now, if we check our general markets section under our MarketEdge.ai homepage, we see that our market sentiment index is risk off. So this also lines up with the economic and fundamentals we just covered. Mixed market signals with cautious positioning amid profit taking, sector rotation, and macro uncertainty, balancing risk and defensive flows. Defensive flows, it's another key red flag for any long positions. The uncertainty and worry in the market and in the world. So we're looking at a 44 that is a neutral outlook. We have macroeconomic uncertainty, profit taking in equities, sector rotation to growth, and we also have our defensive health inflows. We could check our inflows, our capital flows charts down here too. Check our safe havens. I see gold is up about 0.18%, not the strongest move, but our other safe haven assets are a bit more bearish, so something to keep an eye on. Somebody was asking for the dollar before. I will cover it real briefly one more time. Hey, what's up, man? Good morning. How are you? So on the dollar, we see on the hourly time frame at least that we've been rallying since the 28th. The dollar's up over 1.5%. That's a big move on the dollar to the upside. That's going to help support gold to the downside. This is the hourly. We could take a look at the daily too, and the daily just further confirms that. I mean, I've had marked out since October 17th that we were trying to create. I'll move this over a little bit for us. On the dollar here, we made a lower low, but then we started to make, this was a lower high off of this lower high, but then we made a higher high off of this high, and then we made a higher low off of this low. So once we started to form this is a bullish pattern on the dollar that would help confirm bearish sentiment on gold too. So we look for confluence. That's helping me be a bit more bearish on gold today. Let's take a look at gold itself and see what's going on there. All right, guys. So gold is range bound. Like we said, we're between 39.90 to about 40.37. 40.37 was a great area for short positions over the past few days. We see it works well Friday, again Monday night, and again Monday in the morning for New York session. At the moment, we are trading at the bottom of this range. So I wouldn't be so quick to short these lows, but I also wouldn't be so quick to go long based off of our intraday on gold being more bearish, right? So 39.62 is a price target I would like to look for, but I'm really going to see, or need at least, a strong push into this demand zone to show me that buyers are starting to fail, maybe a fair value gap, maybe a volume imbalance, and then a retest of that zone to take that short position. Another thing I might look for is if we just sell off real strong through here, we see we're already selling, we break this recent low, possibly even break previous day low, and then get a retrace and take the short. I do not want to, however, go short on the breakdown, because whenever we try to take a breakdown, a lot of times markets will pull back. So we want to be patient on that. Yeah, I could tell you how to use the COT report for sure. Something I will mention, guys, about the COT report is that it is closed due to the government shutdown. So we haven't gotten an updated COT report since September 23rd. Guys, it is November 4th. We haven't gotten one in quite some time. Last time we got one, we could take a look at let's do metals. Last time we got one, gold was extremely bullish. We see an 83% long. We see a 16% short. Net positions positive 266,000. So we can click this, and this would be our COT report. Now, I like to put net positioning. I like to put that one on lines. It's a bit easier to read that chart. So our large speculators, these are the ones that are trading with the trend. So these are the ones that are looking to profit with the trend. That's the blue line on each chart. The pink line, that's commercials. These are people that are hedging with futures. So they might be long in SPY calls, they might be long in SPY just stock, whatever the case may be, and they're hedging their long position with futures. So they're going against the trend. So we want to see large specs up and commercials down. Once we see that both of them starting to sort of rotate and cross their paths back in, that's when it's a bit of a red flag to say, hey, guess what? Large speculators and commercials might be switching their positions. Long and short ratio by trader type. This is another way to look and see long and short ratio. Of course, large speculators, if they're long, if we're bullish, should be above our commercials. And as we see, commercials is very low. And small traders, guys, that's the yellow line. Wouldn't really pay too much focus to that. Not really going to give us a big impact in the market. Guys, awesome stuff today. Hope you guys enjoyed some of the call. We do have some more things to cover. I wanted to show you, economy-wise, how things are coming in. So we see our interest rate is starting to drop. We were at 5.5% back in July 2024. Since then, we've had a 0.25 cut, a 0.25 cut up until December 24. Then we had no cuts until more recently of September. September came in, we had rate cuts, we had optimism, people were real bullish on the market. It's exactly what we got. Well, now at this point, things are starting to stall out. We did just get that October cut. Now we're down to that 4% to 3.75% range. Do we keep continuing lower? And how is that going to impact inflation? We see our CPI report is right here. That's our core price inflation right here. We see it's been pretty stagnant up until May. It looks like it was dipping lower until May, and we know that April is when we turned around. Yeah, Luca, my name is Kevin on Discord. Let's see. Unemployment rate has been pretty stagnant, but slowly on the rise. And again, so if unemployment's going up, our core inflation's going up, this is horrible for the economy, right? We don't want to see price going up and jobs positions, unemployment going down, or unemployment going up, I should say. So we have to be aware of what's going on in our economy. GDP. GDP, guys, I don't know if you realize this, but the 3.3 we had right here in August, about 0.6%, 0.6 of that, or I think even half of it, was all the one percenters, not even retail. The one percenters, that's how much they were spending and how much they impacted GDP at that point. Consumer sentiment index, this is our Michigan consumer sentiment, has been slowly on a decline as well. So a lot of things are suggesting that markets aren't as strong as they've been presenting themselves. We can take a look at the S&P 500 and see what's going on there. It's 8:26. Markets don't open till about 8:30. Turn off some of our settings. I see the S&P 500. We had a gap from this was a Friday to Sunday. This was a strong gap. Whenever we have gaps like this, guys, I prefer to use them as support zones. We see every time price came into it, it was supported, we moved higher. We swept this low, it was supported, we moved higher. What happened after? Came into it one more time, supported, and then we failed. This is what I like to look for, guys, whether this is a demand zone or area of interest, to say, okay, we had one rally out of it, great, that was a big one. The second time we came into the zone, we went a little deeper into it, and the rally really failed. The rally did not take us anywhere. Check it out. The rally came up here. So the rally's getting weaker. That tells me buying volume and buying pressure is getting weaker, which tells me also that guess what? We're probably at some point going to get ready to break through this zone. If this zone fails, which it's starting to fail, we're going to break through it on the next test. We got the break. Now this area that was support on ES now becomes my area of resistance. And we could take a look at market and see ES slightly bearish. We see price target to the downside 67.80. That's exactly lined up with, I have a key level down here, 67.83. Perfect. 68.45 is our pullback area. I just want to update our previous day high and low on the S&P 500, just so we're aware of it. Previous day low is over here. Previous day high is over here. We've already broken that low and sold off very strong. So a break of the low and a reversal isn't in line anymore because we've broken it and stayed below it. So we can look for the 15-minute, the 30-minute, the hourly. And what I'm seeing is this big drop overnight and this imbalance that was formed. I consider this an imbalance because price moved so fast in this area that volume probably didn't intercept. So we could put our volume profile up on here and we can see that yes, we have heavier volume down here and extremely low volume right in here. This is our low volume shelf. This is where I'd like to see ES pull back to. And look at this, guys. This lines up perfectly with my market level of 68.45, 68.45 right over here, right at the top of the zone I'm looking for. That is amazing. So this is the price level I'd like to see the ES reject today. So previous, let's do market. This is our market level. And then our market level to the downside is right down over here. So guys, our market levels also give us our range that we're trading. So we don't want to be going short when we're trading near our market level to the downside. We don't want to go long when we're trading near our market level to the upside. We want to wait for the reactions to these and trade the range. If we could come up near our market level to the upside, can we reject it? Or can we come up near it and possibly break it and have this area that was resistance? Because right now when we're below it, it's resistance. Have it become support. And that could be another way we trade this level on ES. So guys, we covered some S&P 500, we covered some NASDAQ, some gold, the dollar. I hope you guys enjoyed today's Market in the Morning. Make sure you run that like button up so fast, and we'll see about getting the show for Tuesdays and Thursdays. Guys, I will see you all next time. Take care, happy trading, and make sure you follow us on social media at MarketScore_AI, and you can follow my personal Instagram as well at Trading.